Welcome to Pressure Points. Our topic is Nvidia earnings. I'm going to start with a broader recap and then hit the pressure point, which is what is this company's growth going to look like in 2025? That is calendar 2025. Taking a couple steps back, as of the time of this recording, shares of Nvidia are up about 6% in the aftermarket. That compares to up about 3% when the numbers came out. The stock did rally during the conference call, and particularly on a comment from Jensen that said, I quote, "We will see a lot of Blackwell revenue this year." So confirming that the timing is in fact this fall, and also that the magnitude is going to be more than I think what some had expected. So that's where we lie right now, plus 6%. My sense is that the stock continues to gain momentum in the days and weeks to come because the party feels like it's just getting started. And that ultimately is back to the pressure point, which is what does that growth look like in 2025? So going into the call, I was talking about the Osborne effect. This, of course, is the phenomenon when a new product is announced that's not yet available. The existing product, the demand for that slows. And what we saw with NVIDIA's results is the Osborne effect did not kick in. In fact, that the Hopper demand continued to be robust. They beat the top line by 6%, and they also guided up for revenue in the July quarter. It was 5% higher than where the street was at. So they're bucking the Osborne effect. That is all positive for this calendar year. But again, back to the pressure point, what does that mean for calendar 25? And as a setup for calendar 25 is the street is looking for, as at the time of the report, for 26% growth. That's going to probably inch up after analysts think about what happened to maybe plus 28%, but that is down measurably from the 107% expected growth this July quarter and the 260-ish% growth they just reported in the April quarter. So you can see this downward trajectory. Understandable that these growth rates are coming down dramatically because when you're comping up against what I think is the most incredible comps that I've ever seen, 260% comps, it's understandable that the growth rate does decline. So don't hold that against NVIDIA, the declining numbers. What matters is will they grow, in fact, faster than the 28% next year? My sense is that they will. And the biggest reason is I do believe that this party, if you will, is just getting started. I am wearing the closest thing that I have to a party shirt to reflect that view. And ultimately, I think that if we continue to see the type of demand through, I think, this 4 chapters that Jensen talked about of the build out of this AI industry that he referred to. So as a reminder, the first phase is related to training and inference. That's where we're beginning. Next is enterprise. Then he talks about heavy industry and also sovereign AI. So these are kind of this, he's building the case that we're just getting started. And in fact, I do believe that that's the case. So when we put all this together, the pressure point related to growth in 2025, I think that this gives me increased confidence that we're going to see faster than expected growth for longer with NVIDIA. I'm going to pause there with the pressure point and then just kind of clean up some other important topics. And in no particular order, I talked about China. I said that it continues to be competitive and expected to decline year over year in this current quarter. I think that view is almost identical to what they said last quarter, so it continues to be challenging. In the Q&A, it came up, and Jensen said, basically, it's a small part of our business, and if you look at the broader business, we're continuing to see great growth, which is true, and so it's kind of now at a point where maybe it's small enough that we shouldn't worry about it, was kind of the underlying message. They did reference again, this concept that we're kind of 5% of the way through it, at least in terms of some of the build out, and that speed is of the essence with their customers. I mean, they've got all the greatest customers in the world, and speed is of the essence. And this plays into the concept of again, back to this Osborne effect of speed versus the new chips. And what it's clear is that they are going to be coming out with new chips on an annual basis. And if they can hold to that annual release schedule, that essentially diffuses the whole Osborne effect. If customers know that they're going to get a new chip in a year, and it's the beginning of the year, they're really not missing out much by buying it now. That's very different than a company that upgrades their product once every 2 or 3 years. Then when you start to get closer to that upgrade cycle, you really see a big drop off in demand. So putting it all together, this annual upgrade piece, along with just the intensity that their customers have in terms of speed, lays the groundwork to, I don't think we're going to have some big hiccup, some big miss, I think, kind of going into the fall. I think that was de-risked here. One last piece kind of in the other category is just what's on the mind of the customers. And Jensen did a good job of explaining the concept of the race that is going on and the need to get to the next platform ahead of everyone else. If you're first, he said, you make a breakthrough. If you're second, you're 2 or 3% better than the breakthrough, and it really just doesn't matter. And so I think that really captured the spirit that is in play here. And when you wrap all of this together, I come back to, this is great for Nvidia, but also great for, I think, the broader tech market. I do continue to believe this is yet another data point that we're in the early stages of a 3 to 5 year bull market that will end in a spectacular bursting of a bubble. But I still think we are early in that cycle. So on behalf of Deepwater and this episode of Pressure Points, bye for now.